Question 1. Regulatory framework. In Colorado, a licensed insurance agent is required to provide specific disclosures to clients before the purchase of a term life insurance policy. Which of the following disclosures is NOT typically required under Colorado regulations? A. The premium amount for the policy. B. The guaranteed minimum interest rate. C. The terms of the policy's grace period. D. The policy's conversion options. Answer: B. The guaranteed minimum interest rate. Explanation: under Colorado insurance regulations, agents must disclose important information to ensure consumers understand their policies. Required disclosures include the premium amount, A, terms of the grace period, C, and conversion options, D. However, term life insurance policies typically do not guarantee a minimum interest rate, as this applies to permanent life insurance policies with cash value components. Therefore, option B is the correct answer because it is not a required disclosure for term life insurance in Colorado. Question 2. Claims process. Mr. Thompson recently passed away and his spouse, Mrs. Thompson, is filing a claim on his term life insurance policy. Which of the following documents will she MOSTIKELY need to submit with her claim for it to be processed promptly? A. Mr. Thompson's medical records. B. The original insurance policy document. C. A notarized statement from their children. D. Proof of Mrs. Thompson's identity. Answer: B. The original insurance policy document. Explanation: when filing a claim for a term life insurance policy, the beneficiary is typically required to provide several documents for processing, while proof of identity, D, may be needed. The original insurance policy document, B, is essential as it verifies the coverage amount and the terms of the policy. Medical records, A, and notarized statements from children, C, are generally not necessary for processing a life insurance claim unless there is a dispute about the death or a challenge to the policy. Hence, option B is the most crucial document for prompt claim processing. Question 3. Scenario-based question. Maria is 35 years old and has been considering purchasing a term life insurance policy to provide financial security for her family in case of her unexpected death. She has a clean health history, does not smoke, and has a stable job as a teacher. Maria wants to ensure she gets the most suitable policy for her needs. Given her situation, what should Maria prioritize when selecting her term life insurance policy? A. The policy with the lowest premium. B. The policy with the highest face value. C. The policy that offers the option to convert to a permanent policy in the future. D. The policy that requires a medical exam. Answer: C. The policy that offers the option to convert to a permanent policy in the future. Explanation: in selecting a term life insurance policy, Maria should prioritize the option that offers conversion to a permanent policy. C. This feature allows her to convert her term policy into a whole life or universal life policy without additional underwriting, which is beneficial if her health changes in the future. While the lowest premium, A, and the highest face value, B, might seem appealing, they do not provide long-term security or flexibility. A policy that requires a medical exam, D, could be less favorable for someone with Maria's clean health history, as she might qualify for a more favorable rate without one. Therefore, option C is the best choice for her long-term financial planning. Question 4. Fundamental concepts. Which of the following statements accurately describes a decreasing term life insurance policy? A. The premium remains constant while the death benefit increases over time. B. The death benefit decreases over the term of the policy while the premium remains constant. C. The policy allows for unlimited conversions to whole life insurance. D. The death benefit is paid out only if the insured passes away after the policy has lapsed. Answer: B. The death benefit decreases over the term of the policy while the premium remains constant. Explanation: a decreasing term life insurance policy is designed so that the death benefit reduces over time, typically in alignment with a specific financial obligation like a mortgage. The premium, however, remains constant throughout the life of the policy. This structure provides a more affordable option for those who need temporary coverage that decreases as their financial responsibilities diminish. Therefore, option B is the correct answer. Options A, C, and D mischaracterize the policy's features. Question 5. Consumer rights and responsibilities. Under Colorado law, which of the following rights does a policyholder NOT have regarding a term life insurance policy? A. The right to review the policy within a free look period. B. The right to receive a full refund of premiums if they cancel within the free look period. C. The right to make changes to the beneficiary designation without consent. D. The right to have claims settled within a certain time frame after submission. Answer: B. The right to receive a full refund of premiums if they cancel within the free look period. Explanation: while policyholders in Colorado do have a free look period during which they can review their policy and decide to cancel without penalty, it does not guarantee a full refund of all premiums. The refund may be prorated based on the time the policy was in force. The policyholder can generally change the beneficiary without consent. C. And insurance companies must adhere to reasonable timelines for claims processing. D. Thus, option B is incorrect as it suggests an unconditional right that does not exist. Question 6. Premium calculation and underwriting. Which of the following factors would MOSTLIKELY result in a higher premium for a term life insurance policy? A. The insured is a non-smoker with a healthy lifestyle. B. The insured has a family history of chronic diseases. C. The insured has a steady job with low risk exposure. D. The insured is applying for a policy with a short term length. Answer: B. The insured has a family history of chronic diseases. Explanation: underwriting criteria include several factors that can affect premium calculations. A family history of chronic diseases B may indicate a higher risk of claims, prompting the insurer to charge a higher premium. In contrast, being a non-smoker with a healthy lifestyle A and having a steady low-risk job C would generally result in lower premiums. The length of the term D does not directly influence premium rates, but rather the overall risk associated with insuring the individual. Thus, option B is the most accurate choice. Question 7. Policy structure and provisions. Which provision in a term life insurance policy allows for the policyholder to temporarily halt premium payments without losing coverage? A. Incontestability clause. B. Grace period. C. Suicide clause. D. Waiver of premium rider. Answer: B. Grace period. Explanation: the grace period B is a specified period, usually 30 days after a premium due date, during which the policyholder can make a payment without losing coverage. If the policyholder passes away during this period, the death benefit is still payable. The incontestability clause ensures that a policy cannot be contested after a certain period. The suicide clause C defines conditions under which the insurer may not pay, and the waiver of premium rider D allows for premium waivers under specific conditions, e.g. disability, but does not apply to temporary halting of payments. Therefore, option B is the correct answer. Question 8. Practical applications. James is 40 years old and is evaluating term life insurance options. He is focused on securing his family's financial future while ensuring he does not overpay for coverage. What is the most important consideration he should assess when determining his appropriate coverage amount? A. The total amount of debt he currently has. B. The number of dependents he has. C. The amount of income he generates annually. D. The length of the term he is considering. Answer: C. The amount of income he generates annually. Explanation: when assessing the appropriate coverage amount, James should primarily consider the income he generates annually. C. This figure helps determine how much financial support his dependents would need in the event of his untimely death, while death A and the number of dependents B are relevant factors. They are secondary to understanding the family's ongoing financial needs, which are closely tied to his income. The length of the term D is also important, but it does not directly impact the amount of coverage needed. Thus, option C is the best answer. Question 9. Emerging trends and issues. Which of the following statements about InsurTech innovations in the life insurance sector is true? A. InsurTech primarily increases the complexity of underwriting processes. B. InsurTech has no significant impact on customer engagement. C. InsurTech solutions can streamline policy issuance and enhance customer experience. D. InsurTech companies do not offer term life insurance products. Answer: C. InsurTech solutions can streamline policy issuance and enhance customer experience. Explanation: InsurTech innovations have significantly transformed the life insurance sector by streamlining processes such as underwriting and policy issuance. C. These technologies often leverage data analytics and artificial intelligence to improve efficiency and enhance customer engagement. Option is incorrect because InsurTech aims to simplify rather than complicate underwriting. Option B is false, as InsurTech improves customer engagement through better service delivery. Option D is also incorrect. Many InsurTech companies offer term life insurance products. Therefore, option C is the correct answer. Question 10. Theoretical knowledge. In terms of financial planning, what is the primary advantage of using term life insurance instead of permanent life insurance? A. Term life insurance provides cash value accumulation. B. Term life insurance typically has lower initial premiums. C. Term life insurance offers a guaranteed payout upon death at any time. D. Term life insurance has more flexible premium payment options. Answer: B. Term life insurance typically has lower initial premiums. Explanation: one of the main advantages of term life insurance, B, is that it usually has lower initial premiums compared to permanent life insurance. This makes it a more affordable option for individuals who need coverage for a specific period, such as while raising children or paying off a mortgage. Permanent life insurance, say, accumulates cash value over time, which is not a feature of term life insurance, while term policies provide death benefits. C. They do not guarantee payouts for policies that expire. Flexible premium options, D, are generally more associated with permanent insurance products. Thus, option B is the correct choice. Question 11. Claims process. During the claims process for a term life insurance policy, which of the following documents is typically NOT required by the insurance company? A. Death certificate. B. Policy information. C. Medical history of the insured. D. Claimant statement. Answer: C. Medical history of the insured. Explanation: when filing a claim, the insurance company typically requires a death certificate, A, policy information, B, and a claimant statement, D, to process the claim effectively. However, the medical history of the insured, C, is generally not required at this stage, as it is more relevant during the underwriting process rather than when claims are submitted. Thus, option C is the correct answer. Question 12. Policy structure and provisions. Which of the following clauses in a term life insurance policy ensures that the policy will remain in force despite misstatements made by the insured, provided that these misstatements are not fraudulent? A. Incontestability clause. B. Suicide clause. C. Grace period. D. Misstatement of age provision. Answer: A. Incontestability clause. Explanation: the incontestability clause, A, prevents the insurer from voiding the policy after a specific period, usually 2 years, except in cases of fraud. This clause protects the policyholder and their beneficiaries by ensuring that minor misstatements not involving fraud do not affect the policy's validity. The suicide clause, B, specifies conditions under which death by suicide will not result in a payout, while the grace period, C, allows late premium payments without losing coverage. The misstatement of age provision, D, corrects the death benefit amount based on the insured's actual age but does not prevent the policy from remaining in force. Thus, option A is the correct choice. Question 13. Regulatory framework. Which of the following statements accurately describes the role of the Colorado Division of Insurance? A. It exclusively regulates the premium rates of all life insurance products in Colorado. B. It provides consumer protection and oversees insurance company practices. C. It has no authority to intervene in the claims processes of life insurance policies. D. It is responsible for creating life insurance products and policies for consumers. Answer: B. It provides consumer protection and oversees insurance company practices. Explanation: the Colorado Division of Insurance, B, plays a critical role in protecting consumers by overseeing the insurance marketplace, including ensuring compliance with regulations and ethical practices by insurers. While it can influence rates through regulatory guidelines, it does not exclusively regulate premium rates. A. The division also has the authority to intervene in claims processes when necessary. C. And it does not create insurance products. D. That responsibility lies with the insurance companies themselves. Therefore, option B is the correct answer. Question 14. Premium calculation and underwriting. If an applicant for a term life insurance policy has a high-risk occupation, how would this most likely affect their premium rate? A. The premium would decrease due to the nature of their occupation. B. The premium would remain the same as other applicants. C. The premium would increase to reflect the higher risk associated with their occupation. D. The applicant would automatically be denied coverage. Answer: C. The premium would increase to reflect the higher risk associated with their occupation. Explanation: individuals in high-risk occupations, such as construction workers or pilots, are likely to be charged higher premiums because they present a greater risk to the insurer. Insurers use underwriting criteria to assess this risk and adjust premiums accordingly. The premium would not decrease, A, or remain the same, B, and while high-risk applicants may face higher scrutiny, they would not automatically be denied coverage, D, without further evaluation. Thus, option C is the correct choice. Question 15. Critical thinking abilities. If a policyholder's financial situation improves significantly, how might this impact their term life insurance needs? A. They will likely need less coverage due to increased financial stability. B. They may want to convert to a whole life policy to accumulate cash value. C. They should not change their coverage as term life is fixed. D. Their insurance needs will remain unchanged regardless of financial status. Answer: B. They may want to convert to a whole life policy to accumulate cash value. Explanation: an improvement in financial stability may prompt the policyholder to consider conversion options, B, such as switching to a whole life policy, which accumulates cash value and provides lifelong coverage. While it may seem reasonable that they need less coverage due to financial stability, A, it is more likely they may wish to reevaluate their overall financial strategy. The notion that term life is fixed, C, is misleading. Policies can often be adjusted. Option D is incorrect as insurance needs can change significantly based on financial circumstances. Therefore, option B is the best answer. Question 16. Problem-solving skills. Sarah is reviewing her term life insurance policy and discovers she has a waiver of premium rider. Unfortunately, she becomes temporarily disabled due to an accident. What should she do next to utilize this rider? A. Continue paying premiums as usual until she recovers. B. File a claim with her insurance company to activate the waiver of premium rider. C. Cancel her policy as she no longer needs it during her disability. D. Wait until her disability is permanent to use the rider. Answer: B. File a claim with her insurance company to activate the waiver of premium rider. Explanation: to activate the waiver of premium rider, B. Sarah must file a claim with her insurance company providing necessary documentation of her disability. This rider allows her to hold premium payments during her disability period, ensuring her coverage remains in force. She should not continue paying premiums, A, or cancel her policy, C, since she may need it in the future. Waiting for permanent disability, D, is incorrect as waivers typically apply to temporary disabilities. Thus, option B is the correct choice. Question 17. Theoretical knowledge. In financial planning, how does the law of large numbers relate to the life insurance industry? A. It decreases the likelihood of claims being filed. B. It allows insurers to predict loss more accurately across a large group of policyholders. C. It ensures that all policyholders pay the same premium regardless of risk. D. It guarantees that the insurer will make a profit every year. Answer: B. It allows insurers to predict loss more accurately across a large group of policyholders. Explanation: the law of large numbers, B, is a fundamental principle in insurance that states as the number of policyholders increases, the insurer can more accurately predict the number of claims that will be made. This statistical principle helps in establishing premiums and ensures that the insurer can cover losses effectively. It does not decrease the likelihood of claims, A, or guarantee uniform premiums, C, nor does it ensure profits, D, as profits depend on underwriting accuracy and loss management. Thus, option B is the correct answer. Question 18. Consumer rights and responsibilities. Which of the following statements regarding the free look period in term life insurance policies is true? A. Is the time frame during which a policyholder can receive a refund of all premiums paid. B. It allows policyholders to cancel their policy for any reason without penalty. C. It is the mandatory waiting period before coverage begins. D. It requires the policyholder to notify the insurer in writing to cancel the policy. Answer: B. It allows policyholders to cancel their policy for any reason without penalty. Explanation: the free look period, B, gives policyholders the opportunity to review their new policy and cancel it for any reason within a specified time frame, usually 10 to 30 days, without penalty. However, it does not guarantee a full refund of all premiums paid. A. Since refunds may be prorated, it is not a waiting period for coverage to begin. C. And while notifying the insurer is good practice, it is not strictly required to cancel during this period. D. Therefore, option B is the correct choice. Question 19. Practical applications. Mark is considering a term life insurance policy. What is the most crucial factor he should assess to determine the appropriate amount of coverage? A. The average age of his family members. B. His current income and future financial obligations. C. The premiums of similar policies in the market. D. The length of time he intends to keep the policy. Answer: B. His current income and future financial obligations. Explanation: To determine the appropriate coverage amount, Mark should primarily assess his current income and future financial obligations. B. This analysis will help him estimate how much financial support his dependents would require in the event of his death, while the average age of family members, A, and premiums of similar policies, C, are factors to consider. They do not directly correlate to the amount of coverage needed. The length of the policy, D, is also important but secondary to understanding the coverage amount necessary to protect his family financially. Therefore, option B is the best answer. Question 20. Emerging trends and issues. With the rise of InsurTech, which of the following is a common trend in the life insurance industry? A. Reduced competition among insurers. B. Increased use of data analytics for risk assessment. C. Greater reliance on traditional underwriting processes. D. Decreased consumer interest in life insurance products. Answer. B. Increased use of data analytics for risk assessment. Explanation. The rise of InsurTech has significantly transformed the life insurance industry by enabling insurers to leverage advanced data analytics for more accurate risk assessment. B. This trend allows for more personalized insurance offerings and streamlined underwriting processes. Contrary to option A, InsurTech has generally increased competition among insurers by lowering barriers to entry and enabling new players to enter the market. Option C is incorrect because InsurTech often leads to innovative underwriting methods rather than a greater reliance on traditional processes. Lastly, option D is misleading as InsurTech initiatives typically aim to enhance consumer engagement and interest in life insurance products through better accessibility and user experience. Therefore, option B is the correct choice. Question 21. Policy structure and provisions. Which of the following provisions allows the insurer to deny a claim if the insured committed suicide within a specific period after the policy was issued? A. Grace period. B. Incontestability clause. C. Suicide clause. D. Misstatement of age provision. Answer. C. Suicide clause. Explanation. The suicide clause specifically states that if the insured commits suicide within a certain time frame, often the first 2 years from the policy's effective date, the insurer may deny the claim. This is designed to prevent individuals from purchasing insurance with the intent of committing suicide shortly thereafter. Options A, B, and D are incorrect as they pertain to different aspects of the policy's provisions. Question 22. Claims process. During the claims process, which of the following documents is NOT typically required to settle a life insurance claim? A. Death certificate. B. Policy information. C. Medical records of the insured. D. Proof of premium payments. Answer. C. Medical records of the insured. Explanation. While a death certificate and policy information are essential for processing a claim, medical records of the insured are not typically required unless there is a question regarding the cause of death or if the claim falls within the contestability period. Proof of premium payments may also be required to demonstrate that the policy was in force at the time of death. Therefore, option C is correct. Question 23. Premium calculation and underwriting. What is the most significant factor influencing the premium rates for a term life insurance policy? A. Gender. B. Policy ownership. C. Beneficiary designation. D. Policy riders. Answer. A. Gender. Explanation. Gender is a crucial determinant in life insurance premium calculations because statistical data shows differences in life expectancy between men and women. Insurers use this information to assess risk and set premium rates accordingly. While options B, C, and D may influence other aspects of the policy, they do not directly affect premium rates to the same extent as gender. Question 24. Consumer rights and responsibilities. Under Colorado law, which of the following is a consumer's right regarding life insurance policies? A. Right to contest the insurer's decision without grounds. B. Right to replace an existing policy without any notifications. C. Right to examine a policy during a free look period. D. Right to unlimited claims without documentation. Answer. C. Right to examine a policy during a free look period. Explanation. The right to examine a policy during the free look period allows consumers to review the policy terms and conditions and return it for a full refund within a specified time if they are unsatisfied. Options A and D are incorrect as they imply rights that do not exist. Option B is also incorrect since policy replacements generally require proper notifications and disclosures as per consumer protection regulations. Question 25. Theoretical knowledge. Which principle explains the concept that insurance can only be issued for a risk that has a potential for loss? A. Law of large numbers. B. Risk pooling. C. Indemnity principle. D. Moral hazard. Answer: C. Indemnity principle. Explanation: the indemnity principle states that insurance is intended to restore an insured party to their financial state prior to a loss, not to provide profit or benefit from the loss. This principle ensures that only legitimate risks that could cause financial loss are covered. Options A and B refer to mechanisms that allow insurers to spread risk and predict losses, while option D refers to behavior that may increase the likelihood of loss. Question 26. Regulatory framework. Which entity is primarily responsible for enforcing life insurance regulations in Colorado? A. National Association of Insurance Commissioners, NAIC. B. Colorado Division of Insurance. C. Federal Trade Commission, FTC. D. Insurance Information Institute. Answer: B. Colorado Division of Insurance. Explanation: the Colorado Division of Insurance is the regulatory authority overseeing the insurance industry in the state, including enforcement of state-specific insurance laws and regulations. The NAIC is a collective organization that provides model laws and guidelines, but it does not enforce regulations. The FTC and Insurance Information Institute play different roles unrelated to direct insurance regulation enforcement. Question 27. Problem-solving skills. Mr. Thompson is considering purchasing a term life insurance policy. He is 45 years old, a non-smoker, and has a family history of heart disease. What should Mr. Thompson be most concerned about in relation to his premium rates? A. His age. B. His occupation. C. His lifestyle choices. D. His family medical history. Answer: D. His family medical history. Explanation: family medical history is a significant factor that insurers consider during the underwriting process. A history of heart disease may indicate a higher risk of similar health issues for Mr. Thompson, which can affect his premium rates. While age, option A, is also a critical factor, the family history of specific health issues is more directly relevant to underwriting decisions. Options B and C may also be factors, but they are less significant than family medical history in this scenario. Question 28. Critical thinking abilities. If a client is unhappy with their current term life insurance policy due to premium increases, which of the following actions would be the most appropriate for the agent to take? A. Advise them to cancel the policy immediately. B. Analyze their coverage needs and suggest alternatives. C. Encourage them to file a complaint with the state. D. Suggest they switch to a whole life policy without further analysis. Answer: B. Analyze their coverage needs and suggest alternatives. Explanation: a thorough analysis of the client's coverage needs and potential alternatives is the most appropriate response, ensuring that the client's best interests are prioritized. Canceling the policy, option A, could leave the client without coverage. Filing a complaint, option C, is not a proactive solution, and switching to a whole life policy, option D, without proper analysis could lead to further dissatisfaction. Therefore, option B is the best choice. Question 29. Practical applications. When calculating appropriate coverage amounts for life insurance, which of the following factors should be considered? A. Only current income and debts. B. Future income potential, existing debts and financial goals. C. Age and gender only. D. Personal preferences of the agent. Answer: B. Future income potential, existing debts and financial goals. Explanation: a comprehensive needs analysis for life insurance should consider future income potential, current debts, and the client's long-term financial goals. This multifaceted approach ensures that the coverage amount adequately addresses the client's financial responsibilities and future needs. Options A and C are too limited in scope, while option D is inappropriate, as personal preferences of the agent should not drive coverage decisions. Question 30. Fundamental concepts. What distinguishes a decreasing term life insurance policy from a level term policy? A. The premium payments decrease over time. B. The death benefit decreases over time. C. The policy can only be renewed at a higher rate. D. The policy provides no cash value. Answer: B. The death benefit decreases over time. Explanation: a decreasing term life insurance policy is characterized by a death benefit that decreases over the policy term, often aligning with a decreasing financial obligation such as a mortgage. In contrast, a level term policy maintains a constant death benefit throughout its duration. Option A is incorrect, as the premium payments typically remain level. Option C is inaccurate since renewal terms can vary, and option D is misleading as both types of policies generally do not accrue cash value.